Hi guys, welcome back to the channel. You're with me Arun Sharma, and today's video I'm going to talk to you about the Silicon Valley Bank. Silicon Valley Bank के failure के बारे में बात करने वाले हम लोग. Some of you have been requesting me to be in Hindi, so मैं इस video को I'll make it in a mix of Hindi and English so that it resonates more with the crowd. And the Silicon Valley Bank's failure is the big news in the financial sector, as you know, this week. So we're going to look at the analysis of what happened there, why it failed, what is the sequence of events that led to its failure, and apart from that, we'll also take a brief look at what the next steps are, whether a common bailout is going to happen or not, and this is going to lead to a financial meltdown. What are the probabilities, chances of that? So brief look at that. Of course, a deeper look at those things in my next video on this issue. But अभी हम लोग पहले Silicon Valley Bank और the reasons that caused its failure के बारे में बात कर रहे हैं. We're talking about that. So Silicon Valley Bank, you should know, was incorporated in 1983, and much before the startup scene actually across the world hotted up. This bank was set up with an express inclination to be the bank for startups. It was something that was focused, its early emphasis as a business was to be the bank for startups. And in fact, by December 22, you can imagine 56% of its loans were to the startup ecosystem and the VC ecosystem. So the fall of the bank has been precipitated by two major conditions. You know, the fall of the bank, I mean, the run on the bank that happened on 10th March was, of course, the immediate thing that happened, or the final nail in the coffin which actually made it crash. But it has been happening, it has been in the works for a few years, and which is why it is slightly difficult to see why nobody saw it happening or why the regulators did not come into the picture earlier. And in fact, the story, the profitability of every bank is about the spread it earns between the deposit, the interest it pays to the depositors versus the interest it gets from the creditors. So एक बैंक का बेसिक बिजनेस ये है कि 100 रुपया तुमसे डिपॉजिट लिया, रिप्लाइज दस 100 rupees in some other investments or in assets which could be in the form of loans or in the form of bonds and securities that it holds. तो the banker's role or the people who are running a bank, उनका main role ये रहता है कि जो 100 रुपया डिपॉजिट लिया उसका जो रेट ऑफ इंटरेस्ट देना है उससे ज़्यादा पैसा उस पर कमाओ, and that's the spread. On average, you have taken 100 rupees at 4% interest, and on average you are lending out 100 rupees or you are deploying that 100 rupees at 6%, you earn 2 rupees, 2% interest, 2 rupees on every 100 rupees that you have as deposit. So that's called a spread. And कितना spread पे operate कर रहा है बैंक, उसी पे सब कुछ dependent है. तो Silicon Valley Bank का जो crash है is actually a story of the spread, and it's a story of the asset liability management, or you can call it mismanagement in hindsight. You can give them a little bit of credit also. ऐसा नहीं था कि you could see what's going to happen in the future, and what has happened in the last 3 months has been one bad news after the other. So a series of things happened which in hindsight make you feel that what they did was mismanagement, but let's understand the story. So what happened is 2017 से principally तो तुम जानते हो ना, you know that this was a bank which was mostly a startup and a VC bank, right? And startup and VCs were flush with funds over the last 5-7 years because interest rates were close to zero at the bottom rates, because inflation had not been seen in these economies for ages. So you had VCs and startups flush with funds, and because they didn't have deployment opportunities for those funds, obviously even if you are a company and you have got a lot of money in your assets, you put it into a bank, and if you're banking with SVB, you start putting that money into the bank, and that's what happened. This is what happened is resplendent here, or is visible here. 2017 से 2021 के बीच में deposits of Silicon Valley Bank $44 billion से $189 billion, 4 times बढ़ गया. 4 times. The deposit that they were managing in 2017 was $44 billion. And that went to $189 billion by the end of 2021. Why did this happen? Again, as I said, the startup ecosystem was flush with funds, and because of COVID also in the end of 2020, etc., in the middle of 2020, deployment opportunities for those funds were very less, even for startups. You're only operating digitally for almost a year and a half. Some startups, some VCs अपना पैसा बैंक में रखने लगे. So because of that, deposits 4 times हो गया, right? And nobody needed, the loan market was not that happening because people had money in their accounts themselves. You'll only take loan, or as a business you'll only take loan if you need money to run the business. So there was not a corresponding increase in the loan book of the company, of the bank. The loan book at the end of 2017 was $23 billion, and at the end of 2021 it was only $66 billion. So you can have a look at this. and you can read between the lines to see that the gap between deposits and loans is $20 billion. Obviously, पूरा deposit आप loan में नहीं देते हो. You have to have a CRR and an SLR ratio which you hold in completely safe assets, etc., so that you can pay back your depositors. That's one. And of course, you also hold stuff, the remaining amount which you cannot loan out. You keep some part of it in bonds and securities which are giving you some interest, right? Which is ideally more than what you've taken the money from the depositors. So you look at the gap. The gap was $20 billion in 2017, and that gap became 6 times. It became $123 billion in 2021. So 5 साल में, 4 साल actually, end of 2017 to end of 2021, 4 years के period में, the amount of money which was not utilized for SVB went from $20 billion to $123 billion, 6 times increase, became into 6, 500% increase. And as I said, COVID also restricted the opportunities to deploy the money, both for the consumers, so they kept putting more money into the system, and to the ecosystem, and also for the bank, because there were not any takers for his loans. So this mismatch started creating a problem, and this is a long-term problem that was emerging over the last 4 or 5 years. So what do you do if you're a bank who has got too much deposits and is not able to deploy it? You have to somehow create that spread, because if you're keeping it with yourself, the money with yourself, you're not going to earn any interest on it. What they did, which is again, as I said, not very wrong to do, and that most banks across the world have done that. The extra funds, they put into investments. And when they put into investments, by the end of 2021, they had $128 billion on their balance sheet in bonds and securities, which they had bought. $128 billion in bonds and securities, almost double the size of the loans they had given, right? And on top of that, these securities and bonds were either liquid securities or in held to maturity securities. So liquid security is a security, AFS, available for sale security, is a security which you can sell as and when you want. It's completely liquid. While held to maturity is only, you get the proceeds of that only at the end of the maturity period. And maturity periods can be from as short as few days to months and years also. So this is what it did, and things seemed stable till the world changed. And the world changed. Inflation started happening. Inflation started hitting economies across the world. Inflation, economies जिन्होंने decades छोड़ो generations में inflation नहीं देखा था, those economies started seeing inflation. And when they started seeing inflation, the central bankers of these economies got spooked, because inflation is a bad word in politics and in economics. So, and high rate of inflation is something that destabilizes the economy. So they started trying to control, and the only measure or the only tool that central bankers have to control inflation is raising interest rates. So as you must be aware, last 6 months to a year, interest rates have started going north. And when interest rates rise, the bond prices prices of the bonds start plummeting, because you have more opportunities. If you are sitting on funds after interest rate rise, you will go to, there's less spread between taking a totally risk-free option versus going to a slightly risky investment. So the prices of the bonds, people holding bonds, they lose because of the plummeting of the price of the plummeting of the prices of the bonds. And parallelly, what happened was VC funding entered the funding winter. As you know, last couple of years, the VC funding, the number of unicorns, the rate at which unicorns have been created across the world, in the Indian economy specifically. Also, you've seen it around you. Some of you are part of the ecosystem, so you know what's happening around. So the funding winter started, and it's now getting longer and longer, this funding winter. Initial hopes was that maybe 1 quarter, 2 quarters, 3 quarters, but now it looks like the funding winter is going to be a couple of years at least. and there's a lot of bloodbath on the system. So the VC funding entered the funding winter. So when VC funding froze, all these startups who had accounts in the bank, they started pulling out funds because they needed funds for their operations. And an indicator of that is that the deposits which at Silicon Valley Bank at the end of 21 was $189 billion. At the end of 22, it had dropped down to $173 billion. $16 billion was actually taken out by depositors to obviously run their businesses. At this time, there was no run on the bank. During this stage, it was normal. Withdrawal pressure was much more than the deposits entering. So the cycle that was going up in terms of deposits in 17-21 actually reversed because of the VC funding winter. And to sustain itself during this time, SVB had to sell off its entire liquid bond portfolio at prices lower than the prices they had bought for. So when it sold its liquid bond portfolio towards the end of 22, their loss that they incurred was actually $1.8 billion. They sold it at a loss of $1.8 billion, and that created a huge hole in their balance sheet. And this is where things started coming to an head, because this hole was announced on 8th March. March 8th to March 10th, everything happened in a sudden this thing. This was all building up over the last 2, 3, 4 years. And March 8th, suddenly, things came to a head when SVB announced a fundraise or a capital raise of $2.5 billion. Right? And when they announced a capital raise of $2.5 billion, a run on the bank happened. Why it happened, you need to understand that. There are a couple of things here. The federal insures deposits or protects deposits in American banks to the extent of $250,000, which is a decent amount. If you are an individual who's holding, as an individual, you will not hold more than $250,000 in your bank accounts. Very few people have more than that. So the Federal Reserve insures $250,000 in the American banking system. So if a bank fails, $250,000 of your money is insured by the federal insurance. But corporations and companies hold much in excess of $250,000 in their bank accounts. And because of that, the structure of the deposits in SVB was that 93% of the deposits, $170 billion deposits, uska 93% was unsecured by federal insurance. So obviously, मेरा पैसा अगर मैं कंपनी हूँ, मेरा पैसा अगर एक बैंक में डाला हुआ है और उस बैंक में ट्रबल दिखता है कि there's some sign of trouble and huge sign of trouble with this capital raise. So the immediate thing I'll do is I'll go into the bank and request for redemption, or I'll try to take out my deposits. So this is what happened on 10th March. The moment the information about the capital raise became public, all the companies, all these corporate startups, etc., that were banking with SVB were forced to obviously run to the bank and take out the deposits, and that's when the things came to a head and actually the crash happened. So this is the basic story behind it. So what are the implications now? Are there other banks going to fail? Already on Sunday, Signature Bank was closed down by the US authorities because most likely it has similar structures to SVB. And Signature Bank was a bank which was one of the main competitors of SVB. SVB, by the way, for your information, was the 16th largest lender in the US amongst the banks. So coming back, so likely impact kya hai isme? The bond portfolio that SVB had, most of the banks have similar bond portfolios. Every bank will participate in bonds and buy bonds because you obviously, as I said, you cannot, if you take 100 rupees from the market in deposits, you cannot loan out the whole 100 rupees. So some part of your money you will always keep in bonds and securities. So this is a common theme across most banks. But luckily, most of the larger institutions which have deposits in trillions of dollars, etc., most of them have much larger proportion of their money deployed in loans. So because of that, as interest rates have gone up, so they have started earning more in their, so they will take a hit on the bond portfolio. Obviously, everybody will take a hit on the bond portfolio because bond prices are have plummeted as interest rates have gone up. But banks with better loan books or higher proportion of their money in loan books will survive or will have some of these losses, or maybe most of these losses, recovered or recouped from the fact that they will be earning higher interest rates. So the key question now, and that's what has to be watched in this space over the next few days. The key question now is the bailout. What kind of bailout? Where is going to be funded from? A bailout is going to happen. Already this morning, the US government has already stated that we'll protect all the depositors and all the money will be given to all the depositors. So वो तो आ चुका है information. But bailout कैसा होगा? कौन करेगा? कहाँ से करेगा? Where the money will come? These are the big questions that now are gripping the finance sector. The economic policy makers of the US and of obviously US being the largest economy in the world, everybody else is concerned about it. And I'll also come out with a video on that part. Indian impact mein, there are some Indian companies, Indian startups who have been banking with SVB. The names are not disclosed right now, but there are definitely some Indian startups who are banking with SVB. So unka impact, they must be watching this space closely. And apart from that, I think the likely impact to Indian banks, etc., is we are much stronger and much more stable as an economy right now than a lot of the other economies, because we are used to inflation and interest rates cycles up and down much more than these other economies. So I hope you like this video, and do like and share, and do press the bell icon and let me know how you like this, and I'll come up with more content like this for you. Thank you.